Mr. A. Balasubramanian is Managing Director and Chief Executive Officer at Aditya Birla Sun Life AMC. Bala, good morning. Good to have you with us here. Good speaking. It's been a while. So, new regulator coming in. Bala, first thoughts, first reaction. Someone who's very well known in Delhi, and of course, someone who's very well known here in Mumbai as well. I mean, he was, after all, he's held very senior positions. He's been part of the budget making process, and of course, from a market standpoint, was the divestment secretary as well.
Correct. Good morning, Prashant. Thanks for having me on the show. Definitely, I think it's a good choice I think as you mentioned, and he has been, of course, involved in various policy initiatives from the Ministry of Finance, so working closely with capital market players, including the regulator. And he has done great work as part of DIPAM secretary in bringing in practices which helped actually most of the public sector companies to raise capital right from banking sectors, and also took out the largest IPO of life insurance corporation, and also has been deeply involved in helping the public sector companies to raise capital at the right point of time, especially in the last few years. If all of us try to recall, public sector companies not only have been well capitalized, their balance sheets have improved quite significantly, and they've also been party to the overall growth momentum that I've witnessed in the country, which has largely come on the back of one, public spending from the government, from the budgetary allocations, as well as public sector companies making huge investments in bringing their capital investment to the next level of growth to drive the growth momentum. And I assume Mr. Pandey has played a very big role in this, being part of the Ministry of Finance. And his understanding of the capital market and the need of doing a business on a variety of things, I think being closely working with the government on multiple areas, it can only help in the Indian capital market to go to the next level of growth. So having done, I think we must also thank Ms. Madhavi Puj, who has been part of the institution for the last 6 years, brought up a lot of revolutions and a lot of safety mechanism. It is also most important in the rising equity market, in the fast-growing economy. It is equally important to have the right regulation in place, and safety mechanism also should be in place so that we don't have any kind of accident in the market. At the same time, help companies to raise the capital from the public market.
No, absolutely. I have to say, and you would agree with me, right? If we go back, I've looked at different Sebi tenures, maybe going back 20, 22 years. You've, of course, much longer. The last term under, Madhavi Puri Bush was one of the most active, right, in terms of new regulations and lots of changes coming through in pretty much all segments. We highlight what's happened on the F&O side, but it's not just F&O. I mean, lots of other changes have been introduced. As a market participant, more than anything else, Bala, what do you think the new sort of incoming chairman needs to focus on rather? One or two things, very specific. Maybe a change from the past or something new. Go on.
I think in all certainty, Madam Madhavi Puj was extremely active and going into deep in terms of every decision-making processes. Also, I've been getting the best out of one of the best talent Sebi also has got at the lower level officers. They're all extremely sound and solid when it comes to the question of their own knowledge. So they've also been helping the earlier chairman to come up with various policies. I think in order to, as we move forward, clearly the areas where ease of doing business, especially on KFC, given the fact that Mr. Pandey is coming from the government, there's a high probability the single KFC model could become one of the ask the developers have been having it for quite some time, linking to the bank account. Maybe that could be one. And second is, whatever the tightening measures that has been taken, whether it is for the mutual fund, whether it is for the capital market, in the stock market, there are some of the tightening measures which were taken, which of course needed the hour at that point of time. There will also be merit for them to be revisited, given the fact that industry is also learning and putting systems and processes in place, and technology actually playing a larger role in monitoring such kind of things. Those are some of these tightening measures which was taken when the systems are not in place and processes are not in place, and those are not implemented. there is high probability the new chairman may also relook at some of the tightening measures and on a case-to-case basis and see whether those can be relaxed so that the capital market progress can happen a little more better than what we have seen. I think there are many things that are in place. Yeah.
Yeah. Just wanted to get your quick word on the new NFO rules. Sebi has mandated deployment of funds in in NFOs within 30 days. Generally, are AMCs able to deploy funds within 30 days given the volatility that we've seen in the market? Typically, how long does it take for the deployment to take place? And how difficult will it be to now implement these new rules?
So I don't think any difficulty will be there. And given the fact that in general, most of the money managers prefer to invest this money, say about 40 to 50% of the money, they try to construct the portfolio within a matter of 1 month. I think what the mandate says is about not 100% of the investment should be made, at least about 70 to 80% of the investment should be made within that period, which in my view is not that difficult. And also given the fact the money is being raised at that point of time, keeping in mind that there is a merit for such a product exists, therefore the money is being raised. Therefore, there is also merit for the 30 days period of deployment. Also comes from the fact that when you raise money for investing in equity, that keeping in cash may go against the investor's interest if the market reverses and go against your own estimates. Therefore, they're not giving that choice to the money managers, and money is not being raised to keep it in cash. Money is being raised to actually invest in the market. Therefore, the earlier period of this thing, there was no such a regulation which was existing that within certain period. It was almost about 6 months period. Therefore, it was brought down to 30 days. In fact, 50 to 60% of the portfolios, most of the money managers either try and replicate the index initially and deploy it, and then start investing in stocks as and when they feel necessary. That option still will be there with money managers to manage the new regulatory framework. I don't think it will be difficult for money managers to. It may look a little harsh for the money manager to go and deploy the money. The choice of money manager to deploy, he can invest in index funds, and then as and when he finds right stocks, right valuations, right price, he will have enough leeway for him to deploy it over a period of time.
All right, Bala, we'll leave it there. We'll continue this conversation, and we hope that we get a chance to speak with Mr. Tuhin Kanta Pandey. And I'm sure there'll be sort of industry consultations, etc., as well when he takes over. You'll be up there right in front. Thank you very much, Bala, for joining us with that perspective.